the financial institutions in the country can actually also lend government to finance projects. So I must congratulate you, bankers, for that step to finance government. Last time, you told us that because of the risk factors, that's the reason why your interest rates are high. Up to now, we continue to challenge you. When will you ever reduce the interest rates? When will you ever reduce the interest rate? All the risk factors, we have sorted them out, most of them. You formed the credit reference bureaus. There's nothing that you have not done, but yet you continue to say because of the risk factors, that's the reason why the interest rates are high. So we want to challenge you, the financial institutions. Manufacturing, the internal rate of return is around maximum maybe 10%. So if you give somebody at a rate of 15%, certainly you will not be able to pay back and continue in the business. So you think about the internal rate in the country, think about the businesses, and we know that you access, some of you access resources at a very low interest rate from the world, but then you come and almost double, triple the interest rate to our manufacturers. So we want to challenge you, financial institutions, that Uganda is the only country in Sub-Saharan region which with the highest interest rate. You are I don't know why you continue to be the highest. You know, South Africa is low. All these countries are very low, but Uganda continues to have the highest interest rates. So we are asking you to be considerate to especially our manufacturers, because manufacturers are doing a good job. As we speak now, they are contributing 35% to our revenue out of the 21 trillion we collected the other years. 35% was from the manufacturers. Out of the 60 billion, they are going to contribute roughly 17% to our GDP. So this is an important sector, very organized. I don't know why you should continue charging them very high interest rates. So it's our appeal to you that you can reduce the interest rate so that our manufacturers can access cheap capital. On the part of government, we are enhancing Uganda Development Bank to have more capital so that we can support the manufacturers. We have invested substantial amount of money in Uganda Development Bank and want to appeal to the manufacturers to use Uganda Development Bank. If you have a good plan, please go to Uganda Development Bank. You'll be able to access some resources at a lower interest rate because they go up to even 8%. So make sure that you also utilize the Uganda Development Bank. We are also doing a number of things to support you, the manufacturers. We have a project called Grow Project, where we have invested, we have borrowed 217 million from the World Bank. Please take advantage of it. We have Invite project, which is meant to transform the industrial sector and provide jobs. We ask you, the manufacturers, to take advantage of it. We also have some resources which are with these bankers to do with agriculture. We want to ask you also to take advantage of these resources so that you can grow the sector. The other day I was talking to housing finance. I don't know whether you, the bankers, also have access to that, where government has put in money. The big farmers don't pay interest rate. The government will cater for the interest rate, but they pay back the principal. So government is doing what it can to support the manufacturers and support other people, entrepreneurs. So we, as government, continue to appeal to you, the bankers. Please help us to grow the economy. And the only way you can grow, you can support us, is access to these finances that you have, but also at an affordable interest rate. So really I was here just to bless this occasion, and I'm happy that you are having this discussion. I hope that as we progress this year, you will remember that the peace and security that we're enjoying, this wouldn't have happened if your growth of the financial institution, if the environment was not conducive. And this environment has been created by the national resistance movement. So we ask you, as we go to the polls, please remember us February 2026, so that you can continue enjoying this environment. Thank you so much, and have a fruitful discussion.
Another round of applause for the Honorable Minister. Please do not forget that the Honorable Minister is also currently the MP for Ndora West. Don't forget that, as well as not forgetting that he is the chairman of the NRM in Kabale district. Please, congratulations on attaining that position once again. We wish you all the best in the elections. Chair, ladies and gentlemen, the Honorable Minister has talked about why do we continue to have high interest rates, and why, and if possible, that we should run to the Uganda Development Bank for quick access to finance. He has talked about not just having access to the finances, but also at an affordable rate. Honorable Minister, Chair, members of the board, Honorable Minister, you've talked about a number of things. On our agenda going forward is the sponsors' remarks. Unfortunately for us, they are actually financial institutions. And it's important maybe that we all listen in to the sponsors' remarks, because they'll give hints as to what the Honorable Minister has said. So at this juncture, allow me to welcome the International Financing Corporation to give its sponsors' remarks. Thank you very much. A round of applause as they come.
Honorable Minister, Mr. David Bahati, Minister of State for Industry, distinguished guests, government representatives here, policymakers, financial institutions, development partners, members of the manufacturing fraternity, and all stakeholders. Good morning. My name is Anita Nanyumba, and I'm the country officer for IFC in Uganda. Mr. Minister, we've had your plea on interest rates, and the Financial Symposium is going to discuss that. But just as IFC, I would like to point out some products that we have that address issues on interest rates. So one of them is blended finance, where we bring in concessional financing and blend it with commercial financing that brings down the rates. But it also depends on the credit quality of the client. Sometimes we go into clients, I won't delve into the details, but I know you understand when I say credit quality of the client. And there are many other factors which will be discussed today. So I would like to extend our gratitude to Uganda Manufacturers Association for organizing this important event and for providing a platform to address the critical financial challenges facing the manufacturing sector. As we all know, the manufacturing sector drives economic growth and provides jobs which are much needed in our country, because we know that Uganda is predominantly youth. We did carry out a diagnostic on Uganda as IFC, and we noted a lack of productive finance as an ongoing challenge faced by the sector, and not only the manufacturing sector, but generally the private sector. And you also heard in the previous remarks that The manufacturing sector contributes 19% of all the exports in the country. So it's important that we find out, we discuss and get the different solutions for this sector, as it has a big contribution to our economy. So as IFC, we are committed to promoting the private sector in emerging markets. As you know, IFC is the private sector arm of the World Bank, so we deal with the private sector. And as such, the manufacturing sector is key to this agenda. Unfortunately, the sector is faced with challenges in obtaining innovative financial solutions. We believe that the innovative financing solutions, inclusive of advisory services, such as impact investing, public-private partnerships, green bonds, blended finance, asset-based financing, can unlock potential of manufacturers, particularly the small and medium enterprises, which form the backbone of the sector. Our role as a development finance institution is to bridge the gap between private capital and development needs, ensuring the manufacturers have access to resources they need to thrive. This symposium is a testament to the power of collaboration. As you can see, there are different stakeholders. We, if brought together, can bring actionable solutions. It is through partnerships such as these that we create an enabling environment for manufacturers to access affordable financing, adopt sustainable practices, and contribute to Uganda's economic transformation. As we engage in the discussions over the next 2 days, let us focus on practical and scalable solutions that address the unique needs of the manufacturing sector. Let us also prioritize inclusivity, ensuring SMEs, women-led businesses, and other underserved groups have equitable access to financing solutions. I'd like to introduce the IFC team at the end of the table. Please stand up. Who will be participating in the next 2 days. So in conclusion, IFC is proud to be a sponsor for this symposium and to contribute to the dialogue on integrated financing solutions for the manufacturing sector. We look forward to the insights, ideas, and partnerships that will emerge from this event and remain committed to working with all stakeholders to drive sustainable growth in Uganda's manufacturing sector. Thank you, and I wish you all fruitful deliberations.
Another round of applause. The head has spoken about blended financing. We will hear more about that in a couple of minutes. Allow me, Honorable Minister, Chair, board members, to welcome Absa Bank to give also their remarks on this. We need to have this discussion going on, and we need to know the people in the room and their thoughts. Thank you very much.
Thank you very much. Our guest of honor, Honorable David Bahati, Minister of State for Industry, the Uganda Manufacturers Association leadership, manufacturers, sponsors and partners, the media fraternity, ladies and gentlemen, a very good morning to you all. We are pleased as ABSA to partner with the Uganda Manufacturers Association for this important symposium. The forum provides a timely and necessary platform for collaboration between financial institutions, government, the industry, and the development partners, all working towards a shared goal. And our shared goal is to unlock fit-for-purpose financing that truly supports Uganda's manufacturing sector to thrive. It's often said, and rightfully so, that Uganda's economic future lies in the growth and transformation of the manufacturing sector. But we must not just talk about this, we must act on it. And Honorable, we've had the plea around the interest rates, we've had the plea around the turnaround time, and we hear the plea around security. Uganda is a very rich country from a resource perspective. We have a very youthful population, and then we do have quite a number of minerals and agricultural outputs. All these resources really, really support the manufacturing sector and a strong foundation towards building competitive and a resilient manufacturing sector that adds value locally, generates employment, and then boosts exports. At ABSA, we recognize the central role that productive sectors play in the long term and inclusive development. We do support 20% of our loan book, Honorable and UMA. We support the manufacturing sector and the agriculture sector, up to 20% of all the loans that we give out. So we are a key player in this sector. We actively support agribusinesses and the entire value chain. We do support distributors and suppliers, cognizant of the fact that the growth of the manufacturing sector is really driven by the supply chains and the distribution chains. So we continue to explore new partnerships and opportunities to expand our support to the sector, and these new partnerships will drive the cheaper financing that we have been talking about, or that the Honorable has hinted, because it is only through these partnerships that we are able to source cheaper funding to pass on to the manufacturing sector. Our approach is anchored on impact and sustainability, ensuring that the financing meaningfully contributes to the economic development and transformation that aligns to NDP 4, which are the goals around government that promote job creation, value addition, industrialization, and increased exports. So at ABSA, we do not merely seek to be just lenders. We seek to understand the sector. We are long-term partners in Uganda's growth story, and we continue to rethink and refine our offering to the manufacturing sector, because we truly know that each manufacturer is different and their story is different. The future of manufacturing in Uganda will be shaped by bold collaboration like this one, and financing models that are really dynamic and are adaptive to the sector itself. Once again, we commend the Uganda Manufacturers Association for organizing this symposium, for creating a platform that enables dialogue, innovation, and problem solving. Together, we can ensure that the financial institutions are not designing solutions in isolation, but in partnership with the industry, and responsive to the market realities and committed to shared growth. As we say always, at ABSA, we are committed to empowering Africa's tomorrow together, one story at a time. Thank you very much.
A round of applause. Committed to growing together. At this juncture, I can see my friend Terence is walking here. Please come and give your remarks from the Capital Markets Authority.
I'm not a minister, but I think a round of applause for the Capital Markets Authority. Honorable Minister, Honorable David Bahati, the Chairman of the Uganda Manufacturers Association, Executive Director, and the management of the association. Good morning, ladies and gentlemen. Good morning, ladies and gentlemen. I'm sorry, you just had a cup of tea and I felt there's need for more energy. Yes, my name is Terence Tumwine, representing the CEO of the Capital Markets Authority, who would have loved to be here. So I speak on behalf of the CEO as well as the management. So the authority signed an MOU with Uganda Manufacturers Association sometime in about 2018. But why did they sign the MOU? Why are we partnering with the association? Why is this partnership very, very important? While we are the regulators, someone from government needed to take the mantle to be able to allow for financing of the manufacturers, and more so to allow for easy access and innovative access to financing solutions through the capital markets, which is why we signed the MOU sometime in 2018. And since then, we've had a lot of work that we've done with the association, in addition to facilitating and partnering with the association for this symposium. This symposium is primarily to talk about the innovating financing solutions within the manufacturing sector, and we're here to do just that. And I'm happy to be with ladies and gentlemen in the room to literally address this together with the banks. The fourth National Development Plan highlights a very, very big part for us to play as the authority to ensure that there's a sustainable and favorable regulatory environment that will allow for not only the manufacturers but all issuers to be able to raise financing within the capital markets, and which is why we're here, to allow for that regulatory environment. So while the distinguished lady from the IFC talked about private capital, there's need for a regulator who is going to ensure that the access to private capital is fair and there's a favorable disclosure from the manufacturer's side. So we're trying to bridge that gap, and we're trying to ensure that the person looking for financing can easily raise it through the different providers of capital. Is it public markets or is it the private markets? The private markets, among which IFC is also included, and we shall be having quite a number of them in this room tomorrow from the East African Venture Capitalist Association. So we appreciate the vital part that manufacturers play. We appreciate that they are the heartbeat of the economy. We appreciate the impact that they have. Should they sneeze, the economy actually is affected. And we are saying, should you need patient capital, should you need access to patient capital and someone who will be able to grow with you in developing your business, your idea, we are here to help you. We are here to allow you at least access to these providers of capital. And we've seen quite a number of manufacturers grow. We've seen testimonials from people who have raised capital through the capital markets, through the patient capital that people provide. For us, this partnership is extremely important, and we commit to continuously supporting the association for these events going forward. I thank you, and on behalf of the authority, may God bless you. God bless you.
Another thunderous round of applause. Somehow I think we've just taken breakfast, but the hands are not clapping. Allow me to request another round of applause. At this juncture, allow me to welcome DTB to give its remarks. They have been with us for some time now, and it's very paramount that the remarks also represent that. Thank you very much. A round of applause.
Okay, good morning, ladies and gentlemen. In the interest of time, permit me to stand on the protocol that has been observed here, but also to, in a way, congratulate Uganda for an economy that is really in a very safe pair of hands. When I was told that I have to make a few remarks here, I mean, what was really on my mind, I was reflecting on the message that our head of state shared with us. And of course, Honorable Bahati has echoed some of those successes that we've attained as a country. And I know whenever you are given an opportunity to talk about the cost of funding, you don't sound like a prophet who assumes that things will turn around miraculously. You have to be realistic. So I'm going to set the scene for the next conversations, but I'll be as honest as I can be. Mubiru told me when we are in this room, we should be open. So I will try to be as open as I can. Honorable Bahati, thank you for being a good ambassador of Diamond Trust Bank. You clearly have a very solid foundation, and I am extremely proud to see you succeed. Now, the way we manage our economy, you will argue that it's really down to how we manage largely the two policies, the monetary policy and the fiscal policy. Those, if you don't handle their merger exceptionally well, you can hit up the economy and you can crash. There is a need to heavily invest in our fiscal spend. It's largely supporting the manufacturing sector as the heavy lifter of what you produce. But also on the monetary side, if you do not merge the pressures that are associated with managing inflation and obviously interest rate, then you can crash your economy. To us in the financial sector, whenever we get a chance to interact with manufacturers like you always come up with a factor of production that is really affecting you. I am reliably informed the next 2 days you are going to unpack financing. And in fact, the chairman has whispered to me that you're looking at things like accessing affordable credit, sustainable financing options, innovative financing models. The list is long. What really informs the cost of financing to a typical commercial bank? You will argue that for every investment that one is going to be involved in, the guiding principle is the return. I mean, whichever form of investment that you're going to pursue, you have that benchmark that you want to refer to and say, if I get this return within this timeline, I'm good. Now, what are some of those reference points that we've been looking at? On so many occasions, if you talk to us bankers, we drop the yield curve, which is really the function of how government is really accessing liquidity within our economy. If we call a press conference, all of us CEOs for commercial banks, and we announce that from today we are going to give out credit at a very low rate, then the question would be, what is that rate? Is it a single digit or is it a double digit? And if we mention a very low single digit, as in below 5, which is even below probably our inflation, then people will know that these guys have actually lost their mind. They are mad. But the truth of the matter is that it takes effort to get to where we want rates to be. What informs our pricing in commercial banks is really down to largely 3-4 things. From the regulatory side, we are supposed to ensure that the liquidity that we mobilize from you, the population, we reserve a certain portion of that, and that has to be kept in our coffers. We don't invest it for any reason because it has to be availed to you whenever you come to access your money. So that's redundant capital. We don't get any return. The other aspects, my colleagues have talked about them. It's really the risk aspects associated with us, the borrowers. I can assure you that God never created these fingers equal for a reason. Some are high risk, some are low risk. And that's the nature. When Uganda goes to the international market to raise financing, trust me, we do not access money at a rate comparable to the first world economies. But we all pay back. We've never defaulted as a country. But that's the law of the financing game. The higher the risk, the higher the pricing. And the other consideration that we look at is really your probably reason for borrowing. And I bring in the aspect of time. The longer the tenor you access financing at a very high rate, it does not mean that the shorter the tenor you are going to get cheaper financing. Sometimes it doesn't happen that way. But a combination of all that, we come up with a score and we tell you this is your cost of financing, and take it or leave it. So what you have to do as a borrower is to compare your RFP, okay, your proposal with other proposals from other lenders, and whoever gives you a cheaper proposal, you go with that. But blended, if you are to look at the cost of financing in general, it's true, it is high. I can assure you, fellow Ugandans, that there is all effort to reduce this cost of financing, but certain things have to be done right. And I want to commend the efforts of government. As a bank, we have been advocating for certain policy changes in really untying that liquidity that is lying idle. We have over 8 trillion worth of liquidity tied up in our court systems. These are loans that have gone bad, and we want to unlock this money. Because if you're a financial institution and you're administering credit, but you keep on seeing this capital coming back to you for on lending to other borrowers, then that system is moving very well. So we've brought in other experts in the room. We've brought in the legal fraternity to unlock some of the liquidity that is really inaccessible to us. And as clearly you can see, government of Uganda has been investing heavily to support the financial sector. There's a time when we were advocating for a credit reference bureau. There was a lot of investment into that area. So now that was aimed at accessing the credit worthiness of our borrowers in a much more acceptable way, in a much more scientific way. Because if you make all effort to maintain a very good credit grade as an individual, then you should clearly, first of all, access credit with ease, and it should be very cheap. We want to thank government of Uganda through our regulator, Bank of Uganda. Matters to do with getting to know the credit record of a borrower, I think it's the theme of the past. We can ably tell that this is a very good borrower and this is not a very good borrower. Like they say, even Hitler deserves a lawyer. Even the poor credit grades will access credit, but they will pay for it. Now, what are some of the remedies? Clearly, we cannot, there are certain things that are within our influence as financial institutions. And I think the next discussions try to go a little bit technical into these things and assess which levers can you touch to reduce pricing. To government, we always throw our asks at you. One of the things that we are looking at is to really that intersectoral approach in terms of how do we ensure we unlock liquidity that ideally should be used by you and I to advance in terms of our business plans. Then the second aspect is really to you, the borrower. Please emphasize one aspect, and that's your cash flow. Do not create mismatches on your balance sheet. You know, these things sound very basic, but I can assure you there are certain basic fundamentals. There is no reason why you should be out of pocket when you don't have to be out of pocket. If you are procuring an asset that is going to be sweated to generate revenue, negotiate very well with your suppliers and pay them when you must pay them. But if they have to come and set it up here, you know, install it, train your people, and ensure that all the rails are in place and I can sweat this asset and I can produce a product, that's when we should pay you. You should not come to Diamond Trust Bank and access money and start to pay interest when the shipment is on the high seas. There's documentary credit that we all offer, and I'm extremely glad that my colleagues here from Diamond Trust Bank can help you with some of those solutions. Access those products and ensure that you limit your financing costs. All that is down to the advisory that we are talking about. So get professional advice. It's like going to this is not rocket science. Whenever you're not well, you have to see a medical practitioner. So whenever you're going to invest, seek financial advice from the experts. We will definitely, because this is what we do for a living, we will show you when you are supposed to be out of pocket, when you are supposed to be incurring, interest rates that you've committed to based on the loan offer that you have. But where you're supposed to use documentary credit, take advantage of that. And these solutions are available to all of us in the banking industry. Now, the other aspect is really follow the cash. We have gotten to a level whereby Honorable talked about this whole monster called collateral. Collateral in its sense is not the solution to debt financing, because they are assets that you would argue are not easy to dispose of in an economy like this, because they are extremely valuable, that if you want to dispose them of, there are very few off-takers. So that aspect of concentration risk on the off-takers is also a matter of consideration. We all want to invest where there is a return. No one is investing for luxury. So we are basically saying we are going to be administering crediting following your cash flows. There is one aspect of credit that is growing tremendously, and that's micro-lending. It's really accessed by millions of Ugandans because we now have tools that we can use to know your cash flows as an individual without your knowledge, because we now have quite a lot of data points that we can actually study, model and administer credit to you. It could be your mobile activity, it could be your bank activity, it could be any form of data that you have that is linked to the financial system. That is our collateral. Ladies and gentlemen, focus on what is really within your control. Ensure that you do not miss that opportunity of accessing cheaper credit because of what is within your control, and that's your cash flow. Finally, there are other very exciting topics like green lending, green financing. I will tell you, there is no difference between brown and green capital. Largely, most of our capital in Uganda is brown capital. You are never going to get it cheap. However, the benefit to you is that the more you demonstrate that you are following the green financing principles, then you can easily attract other financing options. Our colleague from the Capital Markets Authority has been here. We do not want to get exposed to entities that are heavy on environmental pollution. Clearly, the strong arm of the law will catch up with you, and we can easily shut down your operation. So it's only better that you get it right the first time. And this speaks to the fundamentals of who we want to be exposed to. Look, I can talk until cows come back for milking when it comes to matters of financing. But I am reliably informed there is going to be a technical team that is going to unpack all this. I would love to be here to answer any technical questions, but I can assure you in the audience, they are my colleagues from Diamond Trust Bank. You can stand up for recognition. Reach out to all those ladies and gentlemen. They will ably answer your questions. I want to thank the management of Uganda Manufacturers Association, and to you, Honorable Bahati. I least expected you to be here. The season is very active, but for you to come and spare time, it only speaks to the fact that manufacturers are really at the core of your heart. We have a very ambitious agenda as a country to grow our GDP 10 times. The timeline is cut out. We know the sectors that have been prioritized. There is incredible alignment in the financial sector to these sectors. You manufacturers are involved in that mineral development when it comes to the ATMS strategy. These conversations should happen quite frequently, and we should be updating the head of state on the progress that we are making. At 60 billion in June, we are supposed to be at 500 billion in the next 10 years, and it's possible. The industry will hold your hand to success. Permit me to stop here, and I will say that bank with us and bank on us. May God bless you all.
A thunderous round of applause. The MD has spoken, and sometimes when the MD speaks, you only left flabbergasted. He has spoken about follow the cash, focus on what you have in control. He has given us really a number of avenues in which we can access finance. I liked the idea of please pay when you must. And don't go just paying out finances. I like the idea of the equipment coming in, and only when it's working are you then in good situation to pay, but all that in a documented way through the documentary credit. We have been joined by the ED of Centenary Bank, but allow me at this juncture to first let him rest. Walking in and walking straight to the podium may not be the best of scenarios to have. You don't want to have a person just running all over the place. So allow me at this juncture, therefore, to invite the International Finance Corporation to give us that presentation. The presentation that they are giving to us is about integrated financing solutions for the emerging market. And we think, just a second. Mr. Balikudembe, I thought I would let you off the hook, but I unfortunately it's not going to happen. Why? Because our guest of honor would love to hear from you first, and then we will have that photo moment, and we will please allow him to go and do the necessary duties that he's allowed to do, but he cannot leave. We invite you to this podium so that we can listen to your remarks. You're very welcome, sir. A round of applause, please.
Good morning, guests tonight. This morning, allow me step in on behalf of my boss, Mr. Fabian Kasi, who requested me to step in for him, as you can see on rather short notice. But first, allow me thank also the government of Uganda. I am more than certain that the manufacturing sector is one area that the government, through the Ministry of Finance, has realized that for our economy to grow, this is going to have to be very critical in so many ways than just simply employing people. But manufacturing allows us to add value to many of our goods. We're a very rich country by any standards. We have what is not yet even known, because every other day you meet somebody telling you this has been discovered in this country. So I would like all of us to put our hands together, first to thank the government of Uganda for supporting this. Next is the Uganda Manufacturers Association. This association has come from quite far. I personally became a member of this somewhere when I was still a teenager, when this association was just beginning. I remember the engagements then and the engagements today. Today we are having our second annual discussion focusing around financing trade and financing the manufacturing sector. They have really done more than what we have expected of them, and they continue to ensure that our manufacturing sector grows and becomes a major part in our country. Thank you very much, and thanks for this UMA. I would also like to thank the sponsors in here, my fellow bankers, IFC, and everybody involved in ensuring that this sector grows. The speaker, the predecessor from Diamond Trust Bank, has enlightened us on so many ways that to come in here. But as we grow, and as the economy grows, it is becoming more and more urgent that as a country we can no longer trade and compete with people who are doing things off their laptops, off their phones. As witnessed today, many transactions are happening, but when you look at the statistics of Uganda from a trade finance perspective, you do not want to believe that you're a country. If you look at those figures alone, I recall one time looking at UK, the United Kingdom, Britain in particular, and Africa, outside South Africa, I think, and Egypt, the rest combined were just a percentage of the actual trade that UK takes in. Meaning that we still have a long way to go. But as financial institutions, we are seeing it now differently. We are getting out of the traditional banking to find better ways to support our manufacturers. And I, for one, I know, and I witness that Standard Bank has gone a distance in assisting trade finance using the digital platforms. We're trying to make this as simple as possible, that somebody can trade today, buy raw materials without having to walk out of his or her office, get the raw materials here, or the inputs that are required, and carry on the manufacturing. We are bridging the value chains of these manufacturers. Many of our raw material manufacturers cannot readily reach many of these people. They're requiring capital before they can even start on mining or growing or working on these raw materials before they are sent to the manufacturers. The government has come in and said, let us build the roads to ease the transportation. The banks, we no longer ask people for land titles to support trade. These are some of the decisions we are trying to take right now, having assessed the whole cycle or trading cycle for somebody, to ensure that we provide funding solutions or working capital solutions to the people who are going to supply these raw materials to the manufacturers. The manufacturers are able to manufacture on time and compete with other manufacturers outside the country, export or use some within the country. And our role is to ensure that whole cycle releases a product that is either of equal value, both in quality and price, or even cheaper, to encourage our local market to buy them. So the banks, we've played and we're trying to play a big role in that. Whether you're a very big producer or a very tiny producer, the banks are there. All of you are my witnesses what Scenario Bank is doing at the micro level and the SME stage in the country. We're not going to leave anybody who is going to support this economy, because that is the real backbone of this economy. How we support our local people is what exactly we are going to do. And again, that's why I'm very grateful to the government, as well as the Uganda Manufacturers Association and my fellow bankers, for coming up with this and discussing the different ways we can support ourselves and grow the manufacturing sector. Because that way, the economy will become much more self-reliant and everybody will be happy. So with those few words, allow me give time to the minister who has spared his time to come and join us so that he too can give us a few words. Thank you very much, ladies and gentlemen.
Thank you very much, Mr. Baliko Dembe. A round of applause for Centenary Bank, the Executive Director. Allow me at this juncture to welcome the Minister, the Chair, and the Board, as well as our sponsors, to have a photo session here. We are very cognizant of the Minister's time. So allow me to quickly welcome all of you so that we can have that photo session, and then we can at least release the Minister so that we can go technical on the aspects financing the manufacturing sector. Our fourth estate, please come in very quickly and ensure that that photo is nicely done. And then our sponsors, IFC, Absa Bank, DTB, CMA, and Centenary Bank. Please, let's step up. Board, please come along. The board, please come along. I think we'll have it here in the middle. Here in the front, please. Yes. Yes. A little bit upwards, please, so that we all fit in that photo. We are well represented. I like that. Yes. Yes, the Executive Director, you're missing. Okay, we are well guided. All right. I think, Chair, you are a little bit, it's okay? I hear let's reduce the backlight. If we can, the backlight, please. Light at the back. Light at the back. So, and then the panelists, please join in very quickly. The panelists, let's have you very quickly, please. The minister must be leaving any time now. Our panel, I can see our very own Madame Nannono. Please step up. I know we have been waiting for you. Mr. Kiseka from the Private Sector Foundation and Invite Project, please step up. I see our colleague from the UDC, please come and join in. All right, I think we are good. I think we are well represented. Okay, 2 more photos, please. We need to let the minister go. Yes. All right. All right, everyone must be seen. Okay. I think we have one person on the other side. And we're having the photo with the music in the background, please. Make sure you have the photos with the background music in there. I was only meaning let us smile. All right. Okay. Thank you very much. Thank you very much, Honorable Minister. Thank you very much for joining us. We'll have a small interlude as the minister then walks out, and as we prepare the International Financing Corporation to give us that presentation. Thank you very much. As we escort the Honorable Minister out, allow us at this juncture to prepare ourselves for the presentation by the International Finance Corporation. All right. Thank you very much. Let us welcome the IFC, please, for the presentation. You're very welcome. Let us have that presentation. A round of applause as they come in, because they're going to give us a few things that which we don't or do not normally see around us. They have their tools and mechanisms. I can see 2 gentlemen walking towards me. I'll let the moderation take over from there. Please.
Good afternoon, ladies and gentlemen. Well, the minister has left, but at least we have a fellow bankers here. OMASIS means the members of the Uganda Manufacturers Association. We are IFC. We'll introduce ourselves quickly, then we go through
what we are all about and what we can do for the members of the Uganda Manufacturers Association. My names are William Kizito. I'm a senior investment officer of the IFC, based in Nairobi. I focus on manufacturing for East Africa region. East Africa starting from Ethiopia all the way to Tanzania, covering Kenya, Ethiopia, Tanzania, Uganda, DRC, Rwanda, Burundi. I've been IFC just over 15 years, and I've been doing the same thing, which is manufacturing, financing manufacturing. I started out again in Nairobi, then went to West Africa, where I've been for 7 years, and moved back to the region with the whole purpose of growing the portfolio in East Africa. So, IFC, who are we? We are part of the World Bank Group, as you know, but we focus on emerging markets, particularly Africa, Latin America, Southeast Asia. That's where the bulk of the emerging markets are. And what we do, our products, we give everything between equity and debt and anything in between. Our debt is both corporate and project. Corporate, we all know what corporate is. Corporate is lend against a balance sheet and cash flows of business. Project finance is really greenfield, and of course more risky. And you find it mainly in, well, not mainly, but you find it in infrastructure. You find it in also greenfield manufacturing projects like cement or petrochemicals and things like that. Those are our products. The one thing I wanted to mention is a blended finance. Everybody has been talking about it. In a market like Uganda, we use a lot of that to help de-risk the project, the investment, and also to bring down the cost of funding for the project. We also do give advisory services, particularly on creating a project or helping to develop a project or on creating markets. In many markets we work in, sometimes you have to develop the market. You have to create a deal. It won't be there, so you go there and you see an opportunity, a potential opportunity, then we work with a few partners and create the project. The sectors we finance in, as you can see, we have infrastructure, we have manufacturing, agriculture, and services, and also financial institutions. We do partner with financial institutions. We do provide lines of credit, or we can also co-lend together. And we give private equity and venture capital. We give a lot of money to private equity and venture capital because they can reach where we can't reach, and then they hope to unlock the small businesses. And we're big at mobilization. We don't lend on our own. We like to work with all our other partners to help de-risk these projects. I'll go quickly now. Over the past 10 years, we've invested about 257 billion in emerging markets, and increasingly, on our own account, a lot of it is in Africa. So 24% of it is in Africa, increasing over the years. In fact, in the last year, as you can see, Africa took the lion's share. It was number 2 after East Asia. But it's growing. In the next couple of years, Africa will be number 1. To make my point, in manufacturing, particularly in manufacturing, our biggest portfolio over the past 10 years has been Africa. Single biggest. Right now we have over 6 billion in Africa. Okay? Unfortunately, none of that is in Uganda, so we're here to change that. Yeah, this is one thing I want to talk a little bit because it affects all of us, not just in Africa, but globally. It is what is happening in manufacturing. What are the trends? And you cannot talk about manufacturing without talking about China, because China is the biggest manufacturer in the world, as we all know. It manufactures for the world, actually. Now, actually, there are things that happen in China that are going to be to our benefit, and when we're beginning to see this in some parts of Africa. One of the things that we're seeing is China is moving away from labor-intensive to more, and it's now more technical advanced manufacturing. And then the second thing is the cost of wages actually in China is gone up significantly. So what that means is that some producers are looking at shifting their manufacturing to Africa. And we are beginning to see some of this in certain sectors. One of them is actually, you're surprised or not, is textiles. We're seeing that in West Africa, where some European and American players are now beginning to request for sourcing of their apparels from West Africa. One, because it's closer to them, and then two, the cost of labor is low. It's a labor-intensive sector, so the lower the cost, and so we're seeing that happening. Secondly, as countries seek to diversify from commodities, there's more to add value. Instead of just selling your commodity, selling oil or whatever, now people are looking more at value adding, like growing the petrochemical sector. Certain countries in Africa actually are beginning to do very well. In Nigeria, they're developing a very good petrochemical sector with putting up refineries, so they don't just export crude. They have not just refineries, they're now going to ammonium, fertilizer, and they're going down the scale, the whole value chain. And that is also being replicated in certain parts of East Africa. Okay, Tanzania, there's a project coming up there being developed in the same sector. So this is changing. The other thing is decentralization. In Europe, industrialization is gone. So who else, what's the next industrialization zone? They are more focusing at AI and all those things. So Africa, again, is an opportunity to take over. The other thing is, of course, as you can all see, there's a rise in protectionism. As countries realize they're not competitive, especially in the Western world, there's a rise in protectionism. That, again, creates an opportunity. Okay? So if they are protecting, then maybe manufacturers, they also need to see, there needs to be we need to work together and see how we can also protect our markets and develop and enhance our manufacturers. The global value chains. Global value chains are very critical because global value supply chains, they are very critical. Again, we're seeing changes happening across the globe on those, and we can't shy away from that. They affect everybody. Of course, for Africa, we all know the rising urbanization and growing middle class. It has a good impact on manufacturing, so we need to take advantage of that. Okay, climate change is a story that is being pushed everywhere. It's important. We can't ignore it. But we have now to think smartly. How do we ensure we continue growing without being impacted by climate change? Of course, there is, disruptive technology. We all know what's happening there, and the increased focus on skills. Yeah, I just wanted to give you a quick look at some of the transactions we've done, and you can see a lot of them are in. We have done recycling, chemicals is big. There's a lot of chemicals and some big clients there in Dorama. And then there's fertilizers. So what does IFC offer? Now, for IFC, we have a lot of products. We can spend the whole day discussing our products, but I'll just focus on the few where we really add value. One, we can give long-term money, really long-term. And we are counter-cyclical. So the economies may be going downturn and all that doesn't mean that we can't invest. Actually, we invest where things are going down because we focus on the long term. And then we're a one-stop shop. We can provide you all from equity or everything to everything in between to debt. We also do have advisor services, and actually we leverage a lot on our advisor services to help our clients prepare them for an investment or to help them improve their performance in their operations so that they are more competitive. And we have a local presence in not just Uganda, but across the region. Critical for here is we do provide local currency. So I know people look at us as a dollar institution, but we do give local currency. And Uganda, we can be competitive. Obviously, the project has to meet the certain criteria, but we do provide local currency. And because we're part of the World Bank Group, we give cover for political risk, in case of, and we can demonstrate that so many times over, but it's not given. On this one, I won't talk so much about it because it talks about what we offer, but the key thing I'll show you is our ability to anchor for investors who are looking to do bonds, or a public offering of a bond. We can anchor that investment. We can be, well, by anchoring, I mean we can underwrite it, okay? And means we be the main investor, then so that others get confidence and invest in it. This is very critical. We do like to support our clients. Not just giving you money. It's not about money, by the way, but it's about how can we help develop a project. And this is why we have what we have an upstream team, an advisor who come in and discuss with them. They do what we call pre-development. They do a market assessment. Let's say you want to put up a cement plant, as an example. You want to put up a cement plant. We can help you do a market assessment and even go all the way to do a feasibility study and partly finance it, by the way. We partly finance it. Do the feasibility study and all that is required in it, and then if, of course, the fees comes up positive, then we take a right to first investment on that, and then of course invest. So we do take a lot of risk. It's not just about coming to sell money. We want to work with our clients all the way from developing a concept to actual financing. And this is important when it comes to project finance, or when a client wants to do enter a new market. Just to give you a quick overview, we do provide on our advisor services. We do have a range of advisor services, from lean assessment of your operations to giving you advice on resource efficiency, environmental and social, gender. So we have a range of advisor service products that we can provide to our clients. I won't go into this because this is the decarbonization stories around climate change, and it's a very interesting discussion. But if anybody wants to discuss it, we can have a follow-on session separately. Yeah. Now, we have a case study, but I'm covered out of time, so maybe we'll skip it so my colleague can come in. So we'll go to the next session, which is on agribusiness. And there you'll see that we've done at least something in Uganda.
Thank you very much, William. Sorry. My name's Patrick Macharia, Senior Investment Officer, Agribusiness team based out of Nairobi. As William said, if you're covering East Africa, of course, Uganda is one of your key countries that you cover, and of course, Kenya, Tanzania, and a couple of others. But I've been focusing on Uganda quite a bit, so I'm not familiar with the Ugandan market. So I'll take you through some key slides on agribusiness. I'm not going to go through all of them, but the one thing that you need to note is that we do finance agribusiness from farm to fork. And if you look at that slide, you'll see that we do inputs. So these are people who do, I mean, you can't read from your side, I think it's all blacked out. But you can see we do seeds, we do fertilizer inputs, we do irrigation, crop protection, and all that. And then we move on to primary production. So primary production is probably people who are doing farming in avocado, people who are doing macadamia, who are doing sugar or that kind of thing. So we do finance those kind of clients. We also do commodity processing. So this is where you'll find most of the millers, processors of maybe juices and fruit processors and things like that. We also do secondary processing. So these are people who do packaging. We financed a few companies that are doing packaging. There are a few that are doing processing wood, timber, and all that. But we also do distribution and retail. So you'll still find us, even at the retail level, where we find people doing groceries, some of the supermarkets that maybe focus on agricultural products, we do finance that. So we are agnostic to whatever is along that chain. And what are our goals? So one is to enhance food security. This is very important. And one of the things that we look at when we are going into projects is this project addressing food security? And Uganda is a no-brainer. If most of the projects here do address that. The next one is providing inclusive growth and development. So projects that have, looking at small farmers, women, and risk management. I mean, those we are very keen on. And finally, on environmental and social sustainability. That's always very, very important for us. You can go to the next slide, please. Yeah. Now, you might wonder, and I think William touched on this, what's our coverage? So globally, we are doing about $4.7 billion. We're covering about 213 projects across 64 countries. And you can see the sort of the distribution across the world. Africa, I think we are at second at 20% of contributing to that $4.7 billion. Latin America obviously takes the crown because, I mean, you have big countries there like Brazil who do quite large transactions. And then the rest sort of come within, between the 20% and maybe the least is about 7%. Next. Now, if you forget everything I'll say when I'm here, please remember this slide, because this is the one thing that every client that we meet usually will ask us. Yeah? What is your criteria? How do you fund a project, and which projects do you fund? So I think there's this notion that IFC, we are somewhere up there in the air that we don't know what's happening in the local markets. But we do listen to clients, we do come down, but we have some criteria, basic criteria that we follow. So one is the investment size. So we usually will look at an investment that is just above $10 million US. Stage, it could be an early stage, it could be an expansion, but we have a preference for an expansion because there's already a proof of concept. You've already shown that you can do what you're doing, so you're expanding. But even in cases where we are going into new products or new markets, we do want to see that you have experience in doing what you're doing. So sometimes we do get clients coming to us who have no clue in whatever they're going to do. And they tell us, oh, we have these big dreams, we have this nice slideshow and all that. Can you please fund us? So sometimes it's good that, we look at what is your experience, what's your past experience going into this kind of new project. Viability, obviously, that will need to be tested commercially and financially and all that. Developmental impact. I think from the slide I mentioned before, there are some key things that we normally look at. Is your project going to have a developmental impact? Because it's not just about selling money, It's more than that. Environmental and social sustainability obviously has to be there. Security. I know we've been talking about security quite a bit in this workshop. So security is important because it's very rare that we'll give unsecured loans, right? So, but then when we get into the security, then we can discuss what sort of security you're providing. Sometimes we do want to get blended financing, and this is why it's very important, because when you get blended financing, then you probably don't need the 100% of security. You might go lower than that, but yeah, security is important. And lastly is integrity. I think one of the key things that I usually do when I meet new clients is to know who you are. We can give money, but who are we giving the money to? So we need to know who the person is, and sometimes even do some checks, and then we move ahead with the transaction. So very key in terms of what we look at for projects, for you to know. Next slide. So the next 2-3 slides are about advisory. I will not go into this detail because tomorrow we actually have a session where someone will be talking about advisory in a very specific form. But I'll just note the 5 or so sort of platforms that we advise on in agribusiness. So one is food safety, sustainable crop production. And this, on the sustainable crop production, this is key because sometimes we get, big farmers. Someone has 10,000 acres of land. They are thinking about what kind of crop should they plant, what sort of mix should they get, what sort of markets are they focusing on, and we do have advisory services that focus on that. Then we have sustainable protein, smallholder supply chain. Again, this is very important because we have clients, like I'll mention later, of a milk company that has, I would say, 100,000 farmers who are supplying milk to this company. So then we go into that and support the farmers in increasing their production of milk. And obviously that then brings more profitability to the company. And lastly is climate. I think that's quite common these days. Next slide, please. Yeah, again, upstream, this is where we co-develop sometimes a project with a sponsor. And this here is where you have a bit more long-term view in terms of when you're going to do the financing. So in upstream, sometimes the financing could happen in 3 years, but now you're working with a sponsor to prepare this project for financing. So we do not always want you to come to us when the project is ready. Sometimes we can work with you when the project is maybe half-cooked, and then we work with you to make it workable. And this is why we are saying we don't just sell money. We sell experience, we sell expertise, we sell our global contacts. Sometimes clients come to us and say, hey, I want to start a fish feeding factory or fish feed factory. Do you know someone in your network who does that? And we go into a network and we find someone in Brazil who does the same thing. Next slide. Yeah, again, the same thing. So let's park this for tomorrow. We'll have a discussion on that. Next slide. So these are some of the examples of companies we've worked with. You'll find it's a fair distribution across the continent. We have a lot more, obviously. This is just a sample. And I can say some of the key ones to me. One is Westphalia there. They do avocado, which I know is a big thing it's becoming a big thing in Uganda. So if you want to know 1 or 2 things about avocado, we can talk later. The other one is KTDA, that's Kenya Tea Development Authority, very big in Kenya with the tea farmers and growing. That's my portfolio company. And there's one here called Zambeef. It's a Zambian company. They do beef, they do poultry, they do all sorts of things, mostly in the animal protein sector. But also they do crop production as well. So part of the foods they give to the animals is they actually produce themselves. They grow the animals, the crops themselves. Next slide. So yeah, I think you know the companies. I don't need to explain to you, but I'm going to show you 2 examples of companies we funded here in Uganda. Pearl Dairy is one of them. and very successful, doing very well. So again, what we are saying is that we are not foreign, we are also local. We've engaged with Ugandan companies and done something. Next one. Yeah, and Vol Cafe, I think you also know about the company. And some of the key things, and if we had time to go down into the details, you'll see in most cases we are talking about the number of farmers. You can see here we are talking about 77,000 farmers. So this issue of the impact you're creating in the market, how many people are you reaching, whether it's smallholder farmers or distributors and all that, is always very key for us. So when you say we take too long, we do take long, but some of the things, if you already have some of these things in your project, you might find your project going faster because you tick some of the boxes that we already look at. Next slide, please. Yeah, so I think these are more sort of ballpark slides in terms of our process and all that. We will share the slides later, so you can get into the details of especially how the process goes and what sort of financing we do, project finance, corporate finance, and what we look at. They're all in these slides, but I think our main message here is that we're here to engage. We are global, but we're also local, so please have a conversation with us. Yeah, and let's keep in touch. Thank you very much. I don't know if there was a Q&A in this session or after. I'll leave it to
the Q&A will be after. Please, a round of applause for IFC. You must have seen a number of financing solutions in there for you. They have mentioned it to us that their presence around hasn't been that much in Africa, more especially back home here, but we have been assured they are here to change that narrative. I'm very cognizant of the time, and it being the first day of work after 4 or 5 days off, so I will quickly go to the next session so that we can wrap this up as quickly as possible. So next with us is we have listened to some of the financing solutions. Next with us is a panel discussion to go into the technical aspects, all the details of what has been talked about mainly by the heads of the institutions here. So allow me quickly to welcome the following ladies and gentlemen onto the panel, and then I'll introduce the moderator at the end. To lead this pack is our very own Miss Diana Nanono, the head of the Private Sector Development Unit at the Ministry of Finance, and she heads a lot of advisories and research directed towards the private sector, and in particular the manufacturing sector. Please welcome with me Ms. Diana Nanono. A round of applause, please. Don't get tired. This is for your own financing. Madam Nanono, whether you sit at the end, we would want to listen in to those insights of yours. The next, allow me to welcome another good friend, Daniel Kiseka, the project manager of the investment for industrial transformation and employment. He sits at the Private Sector Foundation. This project has been with us for some time, and Daniel, if I'm not mistaken, it's a $218 million project. So, and it is, as you heard, for industrial transformation. Please, if you're not in the sector which is the transforming industry, don't turn up. So unless you are doing some transformation in industry, export, things like that, please do not come. So this is a project made for us. The next one is the Director Research and Market Development at the Capital Markets Authority, our very own Mr. Dixon Sembuya. Good to see you again, sir. You're very welcome. We hope to see the capital markets really thrive as an alternative source of financing. The next one is the Head of Corporate and Institutional Banking at the Diamond Trust Bank, Mr. Kaziro Chambade. You're very welcome, sir. We've had insights. Now come and give us those details. We have next as a corporate banking director at the APSA Bank, Mrs. Irene Mutiaba Kaviri. Please, you're very welcome. Please, a round of applause. At least this time you will not accuse us as manufacturers. We even have manufacturers support from elsewhere, and we want to welcome you, Madam Irene. Next is Senior Investment Officer from the International Finance Corporation. So I stopped at the Senior Investment Officer at the International Finance Corporation, Mr. William Stephen Chizito. You're very welcome. You've taken us through the presentation. Now let us get into the nitty-gritty and the technical aspects of that presentation. And last, for Mr. Jingo Michael, who is the General Manager Commercial, we have our very own Madame Rose from Centenary Bank. Please step up and let us Madame Badja, is Miss Rose with us? Or you are the one in her place? She's coming. She will be with us shortly. And to moderate this entire session is our very own Mr. Richard Mubiru, board member, chairman of the Economic and Business Committee, to moderate this panel. Please welcome with me this particular panel. Thank you very much.
I prefer it standing. Okay, sir. Most welcome, panelists. Allow me, ladies and gentlemen, to stand over the protocol that was very well articulated. And first and foremost, a big round of applause for our panel. Some energy, members. I know that we are stressed with time. And I want to start by suggesting that we will delay lunch. Yeah, we will delay lunch for 15 minutes to be able to catch up. And on that note, I don't want to lose any additional time. Allow me, ladies and gentlemen, to start with my very good friend, Madame Nanono Diana from government. And of course, with government, one of our major issues has been how do we revolutionize financing, taking advantage of PPPs. We know that we have a law, we have a policy, but there have not been as many PPPs in Uganda. Would want to pick your mind in terms of what is it that you are cooking, especially in view of the trajectory of growing our economy tenfold in the next couple of years. That's question number one. And I will do the second question in the interest of time so that each one of you takes maybe 3 to 4 minutes in answering. The second one is, Of course, the second one is about the legal and institutional environment that is available for purposes of supporting PPPs. Over to you, Madam Nanono.
Thank you, Mr. Moderator, and good afternoon, ladies and gentlemen. As the moderator mentioned, my name is Diana Nanono, and I head the Private Sector Development Unit at the Ministry of Finance. What do we do at the Private Sector Development Unit? This is a unit that is under the ministry that basically coordinates private sector interventions across the different National Development Plan programs. Mr. Moderator has asked me to speak to just a few areas around public-private partnerships in the country. Ladies and gentlemen, as you may well note, today as we speak, we basically have 2 days to the budget speech for financial year 25-26. And you may all note that during His Excellency's State of the Nation address, the 4th National Development Plan was duly launched. And within the 4th National Development Plan is embedded the 10-fold growth strategy, where government is looking at growing the economy 10-fold over the next 15 years to a 500 billion economy by 2040. And what are the areas that we are looking at in terms of helping the private sector do business better? We intend to leverage the public-private partnerships framework to ensure that we finance the private sector to do business better in this country. Cognizant of what Mr. Moderator has just mentioned, that currently we do have a few projects under the PPP framework, and that is true. But under this PPP framework, we have a public-private partnerships law, which is a 2015 act that allows government to work with the private sector to allow the private sector to do business better in different areas. The legal framework does lay out the different areas where government may be able to partner with the private sector to be able to undertake various projects, including the extractives, including areas under agro-processing. This framework is duly implemented by a unit called the Public-Private Partnerships Unit, which unit is also under the Ministry of Finance. And the unit is headed by an executive director in terms of the implementation, and it also has the PPP committee that comprises different members from different government ministries, departments, and agencies. Moderator, you asked a critical question on how government intends to revolutionize financing under the PPPs. Fortunately, this has really been detailed and laid down under the 10-fold growth strategy, because government is looking at ways in which we are going to leverage this financing to boost the way private sector, especially manufacturers, do operate in the country for purposes of ensuring that we leverage that model of financing. The revolutionizing will look into areas around reviewing the legal and regulatory framework around the PPP law, but also looking into the administrative measures with respect to how the framework is currently being implemented. Mr. Moderator, I do submit. Thank you.
Thank you very much. Big round of applause for Miss Nanono Diana. The second is from our very own Daniel Chiseka, Private Sector Foundation Uganda. And of course, many of us have listened in to the invite money and many other monies that are available. Our ask is, how can we access these monies for value addition in Uganda? And that's question number one. And the second one is the innovation around easing access. Because it's one thing to have the monies, it's another to have the access. So go for it, and members, let us keep it to 5 minutes for both questions. Thank you.
Thank you very much, moderator, and good afternoon, ladies and gentlemen. Yes, my name is Daniel Chiseka. I work with the Private Sector Foundation Uganda as the project manager for INVITE. INVITE is the investment for industrial transformation and employment. This is a government of Uganda project which is funded by the IDA, International Development Association of the World Bank, but also with other multi-donor trust fund partners. The project portfolio is 218 million US dollars, of which we have 96 million as a credit to government of Uganda, 104 million as a grant, and also 18 million as a grant from the multi-donor partners, who include the government of the United Kingdom, Netherlands, and then Sweden. Under INVITE, we are looking at how we can support the economic growth, looking specifically at those people who are into the manufacturing space. The idea here is to target and support those who are manufacturing, but also looking at the exports. So it is a two-in-one. You need to have a product, but also you need to be beyond the domestic market. You need to look at also the export market. We also qualify and say that we are willing to support potential exporters. And what does that mean? That ultimately you are into manufacturing, you have a product that is already on the domestic market, but you're looking at scaling that up into the export market. So the financing here is that we have the INVITE Trust. We also have the export farm support component, and also the refugee and host district component. In terms of the INVITE Trust, which is up to 85% of the 218 million, we are looking at providing resources to exporters. And these resources are supposed to be sustainable, and hence the INVITE Trust will outlive the project. So when the project goes, the INVITE Trust will come in, will stay beyond the project to support the manufacturing sector, to undertake or to provide the necessary resources in there. We are looking from the trust to be able to provide what we are calling affordable financing to the people in the manufacturing sector. We are also looking at providing long-term financing. So we are looking at a period of between 5 to 15 years, very much long-term. Affordable in the sense that we are looking at tying in the interest rates charged to the sector to between 8 and 10%. But also, we are looking at the amounts that we are able to provide to the people in the manufacturing sector, which would be anything between up to a maximum of about 10 billion Ugandan shillings. Under the export farm support, which is a component of the INVITE project, we are looking specifically at perfecting the products that are put onto the export market. And here, we'll be looking at supporting things to do with standards, certification. We are looking at promotion of marketing, We are looking at supporting manufacturers who have products on putting them onto the export market. So we will, through an international and advisory firm, provide BDS to this segment of business people to be able to improve their product and also be able to grow their markets beyond what they may have at the moment. The other one, under the refugee and host, this component is looking at what we are calling lead investors, going into the refugee and host districts and putting up an investment in there, which should provide employment, but also allow for growth in the sense that it will create employment. So you're putting up an infrastructure in there, but also creating employment and benefiting both the local communities, but also the refugees that are in to have something to do. But beyond that, you're buying from these communities raw products that are processed and then are able to be put onto the export market. So this will be a competitive component where we'll ask for concepts from lead investors to bring up their ideas on how they can boost investment in those areas, and for which the project will provide up to a maximum of 1 million as grant to support that intervention. Where we are at in terms of the innovativeness, we are looking at providing resources in terms of credit guarantees. We are looking at what we are calling a patient capital because of the period that it will take to make that repayment back, but also for the investment in the lead supply chains in the refugee and host districts, where we are looking at having investments that will spur growth, but also increase the export levels from those areas. Thanks, Chair.
Thank you very much. Big round of applause for Mr. Chiseka for those remarks. We want to transit to the Capital Markets Authority. And specifically for the Capital Markets Authority, our major challenge at WUMA is actually having long-term credit. Long-term credit we have had from commercial banks, they are challenged to the extent of the structure of the economy. Now, we know that for you, you are able and mandated by law to be able to put us together and we look actually for capital from the markets. What is it that actually we should be expecting as WUMA? Because we know that the NDP4 should also be speaking to what you are doing in terms of structuring your strategies to align your options in terms of interventions to facilitate financing of the various projects. That's number one. The second is the fact that we live in an environment where most of us are actually pushing for family-owned businesses across board. What is it that actually CMA is looking at for purposes of remodeling options that can be available for family enterprises to take advantage of what we can have? Over to you, sir.
Thank you very much, and good afternoon to all of you. My name is Dixon Sembuya, Director Research and Market Development at the Capital Markets Authority. So the Capital Markets Authority is a government agency that is in charge of regulating and developing capital markets. And in very simple terms, when you talk about capital markets, these are simply markets where you have those who need money, companies, governments, and those who have savings, okay, people like you, me, who have some savings somewhere. So what the capital markets do is that they bring together those who need the money and those who have the money in very simple terms. Now, before I even respond to the question, I would like to actually thank UMA and all the other partners for putting together this second edition of the Symposium. I think it's a very good platform where we get to share ideas, we get to network in order to take our manufacturing sector forward. So kudos to UMA and all the other partners. Now, to your specific question on what exactly the Capital Markets Authority is doing in terms of increasing access for the manufacturing sector. Number one, the legal and regulatory framework. We are currently reviewing our legal and regulatory framework specifically to facilitate the issuance of innovative products. I think if you look at products like green financing or climate financing, if you look at green bonds, if you look at sustainability-linked bonds, we're trying to establish a framework that will enable you as manufacturers to actually tap into such sources. I mean, are you involved in a green business or a business that supports climate change mitigation? Okay, so as capital markets, we are providing that necessary facilitative framework. Secondly, if you look at the Uganda Securities Exchange, which is basically an exchange where companies can raise capital, where people can trade securities, they have what they call the growth enterprise market segment. And this particular market segment targets businesses, and it has minimal requirements for you to tap into capital. Okay, so the whole idea is to have to make it as easy as possible or as accessible as possible for business owners and founders to be able to raise capital through this particular market segment. So there is that specific market segment. Thirdly, issues around business development. And again, this will speak to partly address the second question. I think investment readiness is a key component of you being able to access market-based financing. Okay, your business has to be investment ready. It has to be attractive to the providers of capital, such as the IFC. Okay, you need to have a proper governance structure. You need to have sound governance systems. You need to have proper reporting, financial reporting systems. You need to have proper planning and a proper strategy. Okay, so as part of increasing access, we work together with the European Union, the financial sector deepening Uganda, and we have what is called the deal flow facility. Now, what that particular facility does is that it's a matching facility. It matches those who have capital and those who need the capital. But before undertaking the actual matching, what happens is that businesses are prepared to absorb this capital. Okay, so you're prepared to absorb or to engage with this provider of capital. So this facility will help you with your corporate governance. It will help you with improving on your financial reporting. And ultimately, when you have sound corporate governance, when you have sound financial reporting, then you're in a better position to attract market-based financing. So business development services are a key component of enabling the manufacturing sector to tap into market-based financing. To the second question around family-owned businesses and the options that are available for them, I think without necessarily getting into the exact options, to me, the most important thing remains around the preparedness. I think your investment readiness. I think to me that's the most important thing. And so from a regulatory perspective, and what I've described, the deal for facility, we're actually helping family-owned businesses, Ugandan entrepreneurs, prepare themselves to absorb market-based financing through providing that support to help them improve on governance, to help them improve on financial reporting. I submit.
Thank you very much. Big round of applause for our panelists from the Capital Markets Authority. We transit now, and I think by no particular order, allow me to jump commercial banking and I get so close to Mr. Chizito. Mr. Chizito did indicate to us the fact that Uganda is yet to really partake of the options that you have for financing from the IFC. And for us, and that's why I'm jumping the two commercial banks, because we already borrow from them. I would want to give you an opportunity to do two things. One, speak to us about efforts you are preparing to have for decarbonization as a concept, because at a warmer level, we still have a challenge in our membership being able to appreciate this and therefore would want to see how we can partner with IFC in that direction. And the second one is innovation around the ticket size. The ticket size of $10 million, Mr. Chizito, we are still in Uganda. Ticket size, $10 million. You want anything lower than $10 million, please don't come. What are we talking about? Because 70% of our membership at WUMA are SMEs. And that's why I'm pitching for them. Because as a member of the board of WUMA, it is our responsibility that we pitch for actually what touches the hearts of our membership. Go for it, Mr. Chizito. And this is my clansman. My name is Mobiru, so Chizito, by all intents and purposes, is my cousin. Thank you very much.
Thank you, Mr. Mobiru. Ladies and gentlemen, these are very challenging questions. I'll start with the second one, because I know it's most important to your members. Innovation around the ticket size. I do acknowledge that Uganda is a small economy compared to other markets like Nigeria, Kenya, closer here. And therefore, we need to think differently how we can support our SMEs that are looking at smaller size funding. So, look, there are a couple of things we could do here. The first one is actually the more obvious one, is to work with our counterparts, the commercial banks, who actually know the portfolio of those small companies. So we could work with them and say, look, let's give you a line of credit to support SMEs. It could be specific. It would be maybe SMEs in agribusiness. We could even be more specific and say, maybe in protein, maybe we're looking at people in the poultry sector or people in the ranching. So we could focus on that, or we could make it broader. It all depends on our counterpart, the local, the commercial banks, on how they see the portfolio and how they see where they want intervention. So that's one, collaboration. We could provide line of credits. They come in at, of course, subsidized rates. So then those benefits are passed on to those companies of the partners, okay? We will not go into details, look at the credit assessment of this. No. We will just, in fact, our assessment will be on the partner. It will be on, for example, if I'm partnering with Demo Trust Bank, my assessment will be on the Demo Trust Bank credit, how they do their credit, their loan book, how they manage their loan book, how they manage operations. And then once I have comfort on that, then I say, look, okay, I can give you a line of credit, very subsidized rates, and for online to a certain sector. It could be general for SMEs, or it could be sector specific. That's one. Number two, we could do, again, to our partners, we could provide guarantees. Maybe they have a big client and they want to they want to do more with them, but they've reached their maximum exposure limit. Banks usually have what we call a single obligor exposure limit. So we could then come in and say, okay, let's give you a guarantee, or partial credit guarantee, so that you can do more with that client. If a client is good credit risk, or they are good, the development impact is fantastic, we love what they're doing, we could do that. The third one is working through, and this is increasingly actually important, working through what we call private equity funds and venture capital funds. Again, we give money to these funds, who then go and develop these SMEs, put money in them, they could be equity or mezzanine money, and grow them. And then some of them can be successful, some of them will not be successful. So this money is high risk money. I mean, when it's a high risk, I mean, they take risk, especially venture capital funds. However, of course, they also want high returns. So that is the other side of things. So yeah, that's another way we can go into innovate around the small ticket size. The one last thing which I want to touch on is that IS is trying to come up with what we call a small loans program. we try to put it together, but we need to figure out how to manage it, because, and then of course, the ticket size will be lower. It won't be 10 million. Maybe small loans program could be 1 to 5, okay, or something like that. But we need to think about how to do it, because we've done it in the past before my time before I joined, and losses there were 50% NPLs. So we now have to think about how can we do it better? What are the lessons learned, and how can we do it better? So that's on innovation around ticket size. Efforts on decarbonization. Look, decarbonization is not a small thing. I mean, it's being pushed onto Africa. Africa actually, in terms of emissions, as we know, is very small. Actually, it's negligible compared to the emerging market, I mean to the advanced world. And in a way, certain rules are being set in place which sort of impede our development, okay? So we are aware of that. However, we cannot allow ourselves not to, we have to develop. So we then have to come up with ways of making our operations more efficient and friendly to environment, and to our continent. So what are the efforts we're trying to do? One, of course, we have advisor services that we can offer, sector specific. Certain sectors we would need much more, like in manufacturing. For example, if you're in the cement sector, which is a potential huge pollutant, we can work with you, help you improve on your efficiencies on your production. One of them is what fuel you use. If you're using coal in the furnaces, we say, no, look, you can use biomass, you can use the other way, then we help you come up with alternative sources and then we can fund that. It's also the same thing with steel. And then, in addition to that, advisory services and for look at that is also, we do what we call targeted, in fact, conferences like this one. We're having one like that in Nairobi, actually, specific for manufacturers. To invite them, and then we discuss these issues, and then we showcase what we've done in different sectors in different countries, and how we can replicate that here and this is very important, in a sustainable way and affordable. Sustainable, both that means, sustainable means long term, but affordable for our clients here. I'll stop there.
Thank you so much, Mr. Chizito. Big round of applause, especially in the direction that there can be discussion in terms of the ticket size, and also that we can have another conversation on decarbonization. Allow me to very quickly transit to my sister, Irene Mutiaba, from APSA. Two interventions from your side. And the first is utilizing the available regional and international facilities by the bank. How can manufacturers strike a balance between leveraging, debt financing, and maintaining financial sustainability, especially in these high interest environments? That's number one. And the second component of our set of questions is what existing structured debt instrument opportunities are available that Ugandan manufacturers can take advantage of for their industrial expansion needs to better serve NDP4 aspirations. Thank you.
Thank you very much, Mr. Mbiru. I think I'll take the two in a combined form. First of all, the reason why sometimes manufacturers do really incur high interest rates and is a component of tenor. How long do they take these facilities for? Is a component of discipline in terms of utilizing the facilities, because you find that there are times when loans are due and then you go into penalties and all that. That really also contributes to that. You'll find also the credit profile is a very key component in the pricing that you get from the banks. And credit profile really is a component of, one, your corporate governance. How is it really looking to the banks? Your track record. How does that look to the banks? Is it that you have been getting money, paying religiously, and you're able to get those funds, and you've built some level of credibility in the market, or is it the opposite? Then the interest rates will go up. Then the other thing is around planning. Most of the times a manufacturer will come to you, I need this financing, but really the planning was not done end to end. So the bank ends up structuring a facility that really is out of cycle, is out of the asset cycle, and that is where problems begin in terms of the high interest rates. So a component of many things. However, I would like to emphasize the issue of, one, building a track record, the issue of corporate governance, the issue of financial discipline, really, and how you look to the financiers. Those are some of the things that will help us negotiate, or help you negotiate with the bankers, so that we can be able to get reasonable pricing. So how then do we come in as commercial banks, as ABSA Bank? What do we do? The first thing is to make sure that we do understand what you want to do. As you come into the banks, as you plan your cycles, as you plan your CapEx spend or your capital spend, very, very important for us to understand where you are and where do you plan to go. What form of asset are you investing in? Because all those have different tenors, all those will have different products that we put out. If you want to do an expansion, of course that is a term loan, but that term loan needs to be aligned to when are you going to come into production. Hence, things like moratoriums, grace periods are very, very critical, and that is what we look at. You want to bring in a machine. Why would you pay upfront for that machine when you can negotiate terms, documentary terms, to cater for the transit period, bring it here, and then we draw down on that term loan for you to actually start, when you start production with that machine, it should be able to give you the money to pay back on the term facilities that we are giving. I think also things like, vehicle asset finance, commercial asset finance, you want to put up warehouses. Why don't you go in for a structured product like maybe a commercial property finance as opposed to a term loan? So I think very, very critical for the banks to understand what form of capital do you need, the asset life cycle, and very, very important to keep a credible rating so that we can enjoy some of these subsidized rates that are available. They're actually available, and there are clients that enjoy them. It's just how your profile and how your corporate governance is running. Thank you.
Many thanks. Big round of applause for Irene. 2 interventions and we are done with our panel session. I want to ensure that my own banker, Mr. Kazuri, is the last one, because he has already demonstrated that he can finance, isn't it? So, Mr. Kaziro, hold your breath. I will go to Centenary Bank so that we have the intervention of Rose. Rose, thank you so much for participating as a bank. The question we have is, how does Centenary Bank, or banks for that matter, facilitate international trade, and what specific solutions can you offer to mitigate risks for manufacturers who heavily import raw materials for production? That is for you, Rose. But the last one, and this is based on the experience that I know and I have, that the bank Centenary has taken on other banks in the region. How can we leverage the presence that you have, for example, in Malawi, to better advantage local producers into having to export to Malawi, Zambia, and beyond. Thank you very much.
Thank you, Mr. Moderator. My name is Rose, but allow me, our head of department is here, so he'll just replace my seat. He's taking the question. Okay. Our GM.
Not a problem.
Okay, thank you.
Mr. Jingo has arrived.
Yes, please.
I had not noticed his arrival. Mr. Jingo, can you raise for recognition? He's shorter than me, so he must be able to really... thank you for coming just in time to answer those questions. I will paraphrase for you as you get settled in. One is the fact that we congratulate the bank for taking on another bank in the region, which confirms that our local brands are maturing. Clap for Centenary Group for that. The second is basically what is it that you are doing for facilitating international trade. Thank you, Michael.
Okay, thank you very much, moderator, and apologies for my delay. Well, regarding international trade, and of course, most importantly, facilitation of those who do cross-border trade, that is between Malawi and Uganda, we're able to facilitate that transfer of capital, knowing that within Malawi there is that scarcity of dollar. We're able to partner with our branch in Malawi, and if you say doing business in Malawi, you have a payment but cannot transfer it quickly into USD, we're able to pay the equivalent this side, and of course hedge your FX loss that you would have incurred having done business in Malawi. You know very well if there is scarcity of that capital out of that country, so that would be stuck. We're able to facilitate that. And besides that, we're able to do the transfers of payments. We're able to do export letters of credit. We're able to do also working capital facilities. We've been able to also support those who require, say, reference as they bid for jobs in Malawi. But of course, most importantly, those are the companies that are having, say, business here, and those that are having some business across in Malawi. You know, you're able to use the back of financial muscle somebody has this side as the company sets up footprint, say in Lilongwe or in Blantyre, and we've been able to do it very well. Then regarding international trade, we have a cocktail of solutions. I may not be able to go through them here, but we're able to have that conversation. We are arranging letters of credit for the importers, and as it was mentioned by one of the panelists here, that capital that you would be using in the day-to-day business transaction is set aside, and you're sure that at least the goods will arrive, and of course the business doesn't get stifled. We do the working capital facilities, we're able to do credit lines for our customers, and within which you're able to play, say if you need asset financing, that can be loaded therein. If you require any guarantees, any bonds, we're able to arrange them within that credit line. I think that would be enough, because since we do a lot, I would rather keep it at the credit line. Thank you.
Thank you so much, Michael. Big round of applause for Michael. Now I will be transiting directly to a man and a bank that has banked some of us, Diamond Trust Bank, Mr. Kaziro. Very quick one. How is Diamond Trust Bank prioritizing regional and multilateral trade financing to support local manufacturers in accessing export markets and managing international trade risks? And of course, this is coming against a backdrop that as a brand, you are spread all over East Africa. So we want to pick your mind in terms of what is it that you can continue doing for manufacturers in that space. Thank you very much.
Okay, thank you. Moderator, and I'll start by introducing myself. Kaziro Chambada, my name's. I head the corporate, institutional, and business banking at Diamond Trust Bank. And when I'm in Diamond Trust Bank, I just think of one thing. What is going to be our contribution to the $60.4? $60.4 billion, which is the current GDP for Uganda. I'm sure we have all talked about the tenfold strategy. We all know that we want to grow this to almost $500 million within the next 10 years. And government has come up with an acronym, which is the ATMs. And this is actually, we're talking about agro-industrialization, you're talking about tourism development, you're talking about mineral development, and science and technology. So for any financer across the room, you're asking yourself, what is going to be my play in the ATM strategy? When I was reading the SONA, which is the State of the Nation Address, which was given on the 5th of June, I took note of the fact that regional play is actually becoming a big part of this pie. When you talk about things like exports, our exports as Uganda grew by 26%. They're currently standing at about $9.3 billion. And the kingpin in that is gold, which is about $3.7 billion. You have coffee, which is about $1.837 billion. And then you have cocoa at $410 million. And then industrial products, and all these are for exports. You have cement, $335 million. You have steel, $230 million. You have sugar, $190 million. Fish, $177 million. And milk is at 285. That is on the side of exports. On the side of imports, it goes without saying that we are an import-based country, right from the fuel that we are taking in our cars. And therefore, it's very critical that as a financier, you're looking at how am I going to support manufacturers to, one, harness their importation, but also to help in their export. At Diamond Trust Bank, we pride ourselves in, one, the fact that we're a regional bank. That means that we can work from a trade perspective and be able to deliver your raw materials in country. Using some of our products, some have been mentioned by some of the panelists, things around documentation, documentary trade, things around letters of credit, things around import loans, and then, of course, the short-term loans. And then on the side of exports, I will try to expound on this. When you look at the export side, you realize that the bulk of this is actually seated in the agriculture sector. As a bank, we are trying to gravitate away from collateralized lending, and we are trying to focus more on trade solutions, where if you have an exporter, you already have the contract, and then you also have the farmers. So you structure your product around, one, how do I support the farmers to make sure that they give the aggregator produce? And then thereafter, how do I then support the exporter to make sure that this product leaves Mombasa and it's actually received on the other side. That is some of the key things. These are some of the key things that we're actually looking at. So things around structured commodity financing are very critical for us. And we are looking at anyone who can be able to come, any manufacturer, we can be able to support things like that. Things around export loans, and these are mainly short-term loans that are given to the exporters to just make sure that we facilitate the transition of these goods from East Africa to the markets where they're going. Things around invoice discounting or short-term loans to facilitate the farmers. These are basically probably if it is coffee, if it is cocoa, we advance you money and then you go and you pay for the produce that you aggregate and export. And of course the conventional overdrafts and documentary collection are also key. So you cannot do that unless you leverage on the markets or on our partners out of the countries that we serve. I submit, Chair. Thanks.
Thank you very much, Mr. Kaziro. Big round of applause for DTB. And thank you very much, every one of you panelists. Big round of applause. From the start, I told you that we'll be ending at 1:15, which is what we have already earned. But again, I cannot let you leave the podium without actually picking a few questions from the audience. By no particular order, can I see some questions coming to the panelists? We need to do that in the next 5 to 10 minutes maximum. And whereas I'm not authorized to invite you for lunch, which I think the ED or Alan will do, we will be ready for lunch immediately we're done with the questions. Any hands? Yes, sir. You tell us also your name and the company you are coming from.
I appreciate the honor, sir. Though mine isn't a question, but rather an intervention statement that resonates quite closely with the theme. I am Andrew Sechide, a research and liaison officer at the Uganda Tailors Association. I would like to bring to your attention an often under-leveraged opportunity, that is carbon credit financing. With Uganda's manufacturing sector gradually transitioning to cleaner technologies, how can we strategically position our local industries to tap into carbon markets? In any case, are there any efforts by financial institutions that we have here and other policymakers to develop frameworks that allow manufacturers, especially SMEs, to generate and trade carbon credits as an alternative for revenue stream? As I conclude in compendium, as much as I can understand, such a model could not only incentivize environmental compliance, but also unlock new capital flows into the sector without traditional debt burdening. I believe this is a game-changing avenue worth exploring if given attention. I thank you so much.
Many thanks. Who of the panel wants to take on this, but I wanted to let it go to the IFC person, my very own Mr. Chizito, since he spoke about carbonization. Additional questions? People are, yeah, next, over there.
My name is Musa Senteza. I'm an export development officer in Copimi Limited. My first question goes to Madam Irene. I would like to know the difference between credit rating reports and the Credit Reference Bureau reports. Then I would also like to know the procedures. Does the bank provide the credit rating report, or the client is entitled to come with the credit rating report? The other one goes to Mr. Jingo. Do I need cash? If, for example, I confirm an export order from Malawi, and I'm your client, do I need cash to carry out that transaction? If not, what are the requirements for that process? The other one goes to IFC. Do you have contract manufacturers in your network? If so, what is the procedure for accessing? Last but not least, goes to Mr. Kaziro DTB. Can I receive my payment if I export in local currency? And also,
can we agree that you limit it to that? I know you're a researcher,
okay,
but Rome was not built in one day. Thank you very much. Thank you very much, sir. And I want to take it that the lady right there is the last one, because we have gotten enough interventions. Thank you.
All right, thank you very much, moderator. Protocol observed. My name is Auma Oliver, a researcher and a marketeer at Bamboo Innovation Hub. Okay. My question goes to Mr. Kizito, IFC. Yes, you talked of carbonization, and we are dealing into climate change innovations when it comes to bamboo products. But my point is, if we are open to the accreditation and the support from IFC and other bankers, as the upcoming organization, yes, we are registered and we have been doing the operations. Yes. Are we also open to the assistance from the bankers? If not, why and what should we do?
Thank you very much, ma'am. Mr. Kizito, go for it.
Sorry, the last lady, could you mention the company you're coming from? Sorry.
Bamboo Innovation Hub.
Bamboo Innovation Hub, okay. So you do bamboo products, is that correct?
Yes, yes.
Excellent. Okay. I'll start with the first question, which was on carbon credits. There's a gentleman mentioned about carbon credits for SMEs. Was that the question? Carbon credits for SMEs, yeah. Yeah, look, carbon credits trading is a complex sector, complex industry. You know? So the way it works is, one, the company itself has to meet a certain criteria, okay, to be able to access those carbon credits. And the criteria usually is around your operations in terms of how you're using your resource efficiency, how efficient are you in the resources, in water, energy, things like your technology you're using, and are you a net emitter or you're net, you know, or you're not, or you're actually helping to reduce the climate change. So if, for an example, one came and did an audit on your resource efficiency and of your operations, and you actually very efficient and a saver in the environment or in your resources, then obviously it means you qualify for the carbon credits. But for you to access that market, your size of operation has to be very big, okay, to get those carbon credits. The easier way actually may be to, if for example you want to take out a loan or something, is then you take out what you call a green loan, which may come at a subsidized rate compared to the normal rate. You may get a discount on your, not the discount, but they may get a lower spread than what someone else is emitting. But to now say now you want to indulge in the carbon credit market, it's a different ballgame. I mean, that involves, you have to be operating at a very huge scale, okay? For example, if you have forest operations, someone who has forestry operations, then that one can, you know, can get, and then even then, those operations have to be massive to be able to access those sort of markets. The next question I think was, there's something about contract manufacturing. I wanted to understand, what do you mean by contract manufacturing?
May I guide here, Mr. Kizito, that we take it that these people are still around, they will get a bilateral with you, because these people had particular interest in IFC, because you have been absent in Uganda. That's why they're very much interested in you. Let us agree that we settle that for bilaterals after lunch, okay, such that we now transit to Irene, Mr. Kaziro, and finally Michael. Over to you, Irene.
Thank you, and thank you for the question. I think it was Andrew. So, two things. What's the difference between credit rating reports and credit reference bureau reports? So, credit rating reports are really bank-driven tools. Each bank will have its own tool of how they assess a client, and really it's just driven by two factors. There's a qualitative and a quantitative side of what goes into each of these tools. Now, of course, the quantitative is your financial performance, your projections, the financials basically. And then comes the qualitative. That is where things like track record, if you are rated maybe globally by an external agency, your governance structures, your period of operation, how long have you been in operation? And then the credit reference bureau is only a part of this credit rating score, because then it falls under the qualitative. We bring it out to say, has this person defaulted? How is their financial standing in the industry? So, and do you have to come with it? Absolutely not. The bank, each one of the banks will have their credit rating scores. Once they put in the qualitative and quantitative, there is a score that is allocated to every borrower. The higher or lower the score, depending on how financial institutions rate, is the risk rating they will give a client. So some clients are high risk, medium risk, low risk. The lower the risk of the client, the better probably the pricing, the bigger the facilities, and so on and so forth. So yes, Credit Reference Bureau supported, the Bank of Uganda or the regulator supports us, but that's a component of what we use in the credit rating scorecards and the reports that we get to advance funds.
Many thanks, Irene. Over to you, Mr. Kaziro.
Thank you. My answer also goes to Andrew, who was asking whether it is possible for them to get local currency for their payments from abroad, isn't it? Yes, from abroad. Okay. This is what I've seen with the majority of the exporters. The majority of them actually get their payments in either euros or USD. However, if you really want to get your payments in local currency, we are happy to always give you a good rate, and you can get your proceeds in local currency. Thank you.
Thank you very much. And finally, Mr. Michael Jingo.
Yeah, thank you very much. Maybe I didn't introduce myself. Michael Jingo, I head commercial banking at Centenary Bank. The question came through from Mr. Musa Senteza, the researcher, and as a bank I'll try to simplify it because it was about, do you need cash to carry out that transaction? And it was in reference to the export letter of credit that I had highlighted earlier on. Well, you don't need cash. From the banking side, these are some of the services that are dependent on documents, all documentary credit. So you need, as an exporter, you need to present documents to the bank, not cash. And which are these documents? Talk about an LPO, a commercial invoice, bill of lading, parking list, insurance certificate, and probably the certificate of origin or inspection certificate for the goods to confirm that they qualify to be exported to the other country. These are the documents that you have to present, and of course you are the exporter, so if I am your banker, I'll liaise with the importer's bank who will also look at this documentation before the LC can be nailed. I try to be very brief, but it's a longer process, and we can have another conversation. I know it will take quite a lot if I am to go through, but the question was about cash, and I think I better handle it by replacing cash with documents. Thank you.
Thank you very much. Join me in extending a big round of applause to our panel. And I want to invite Alan to take us through the next course of events. Many thanks. Thank you very much indeed.
Thank you very much, Mr. Moderator, our very own Director, Richard Mubiru. A round of applause for him for a job well done. So, we are about to close for our lunch. Thank you very much, our dear panelists, for the work well done. My job is simply to do the following, is to have a wrap-up. And after we have had a wrap-up, we will request all the guests to step up here, and we have a photo, and then we'll end it up and crown it up with our lunch and close off the day for the B2B sessions that are happening at the back. Now, when we are leaving today, what are we leaving with? We began today with speeches from our guest of honor, Honorable David Bahati, who asked one fundamental question. What I picked out of everything was, what is happening? Why are the interest rates not coming down? And then we got naturally response through the different speeches we had from our sponsors, where we were challenged as well to see how the different financing options could help us maneuver through our businesses. Things like debt finance. We had from DTB about debt financing. We had about exports. We had about how to think of procuring machines, but in a way that allows us to be ready for payback, not just paying back. We went ahead and got other speeches from our sponsors, and then finally we came to this particular session. As you can see, I'm trying to rush through the wrap-up so that I don't stand in the way of your lunch. So we spoke about things such as the partnerships we are having with government around the private sector development, and how government is trying to finance us and help us de-risk the manufacturing sector. We have heard, yes, about the focus of DTB when they are looking at the budget and the national state of the nation address, ATMs. We have heard that one properly. That is where you're focusing, and that's where you want us to focus. Yes, we have heard from the Invite project telling us of the $218 million which is there, and that is accessible or will be accessible by us to finance our manufacturing sector. And then we have heard about, naturally, from the Capital Markets Authority, the access to the long-term financing. We have heard of the different ways we can access that, and not just for the big companies, but also for the SMEs. May I disclose, I think for me, this session is done. My humble director here, may I say that from another world, I've also benefited already from this particular session before many of the other manufacturers come to benefit. We went ahead and spoke about financial innovations in this place, again reiterating the issue of ATMs. And yes, Mr. Kaziro mentioned about the exports that are contributing to the percentages and the different items that are contributing to this export. And then you hinted, sir, on the import side without going into details. And that is where I think most manufacturers want to look into and say, what can we substitute those things that are being imported, whether we can produce them locally, and also look at the export side to see what more we can export. Yes, we went on to talk about leveraging of debt, leveraging the debt financing, and maintaining financial stability in this high interest environment. We also touched, especially from Mr. Jingo, we touched things like operational and cash flow challenges, which we will continue to have until we are able to deal with the entire value chains. You see, from our side, we keep on mentioning that we are producing at 54.5% capacity. And the answer, the big challenge has always been, but are the customers also willing and able to procure and buy our goods? And what we are finding is that the population sometimes has the challenge of purchasing power. So yes, we may not have gone deep into that, but that was the direction into which we were facing. Then we went into the Q&A, and yes, we had the researcher with his many questions, but allow me not to go into those questions, but they were ably answered. With that, allow me to say that is a snippet, that's a wrap-up of what we have gone through. At this juncture, therefore, and without further ado, I would like to request you to have another round of applause for this panel. And secondly, to request you to join with the chairman and the board members and the executive director for a photo session here to wrap up today's function so that we can go into the lunch and B2B sessions. Thank you very much. Thank you for turning up. The administration of the lunch is being carried out by the staff. Let's not worry about that. Please, let's come up here and have a closing photo shoot for the day.
Now it is next it will be Sentinel.
Please, Chair, you may want to step up here with the panelists will join you, and then everyone else, please, you step up. You are noticing we're not having the anthems played because the anthems will be played tomorrow when we are closing. Chair. Please come to the front so that we have that one very quickly taken, and then the rest. All right. Okay, I think that photo can be taken. All right, are we done with that one? Not yet, not yet. All right, Chair, allow me to request that you step a notch lower with the team so that members, you can join now so that we can have that beautiful photo for the day. All of us, let's join in. The fourth estate here has those very expensive machines called equipments of light that are able to zoom in all the way. So please, let's join in. There is an upper section. Maybe the fourth estate, what we'll do, we'll have some chairs down here. Not so? But, okay. There's a lot of space up. Please join us. Colleagues, redeem the time for the day's evil. Just step up. Colleagues, you may want to step up for the session. No? They are coming? All right. Team, you're staying behind, please. Patrick, Gilbert, and Raymond, please step up. Sir, MD, for the photo. Just in case the moderator didn't moderate. This gap here. That gap there. Okay. Thank you very much.
Well done, very well done. Thanks for organizing this.
Omuyise najja nekushuwa nti buli gwe mwetaaga wano
mundu mmenye.
How are you, sir? Not at all, sir. How are you, sir? Very well. Very well, thank you.
Kucha centers of the government, private sector.
Zonna zijja. Money will come. Sente zijja kujja. Sirwa nsanyusa okulaba. Kale, thank you.
Yajja kujja joining at some point. I want to talk to you.
So you're talking.
Bajja kibuuza
Gwanga lino lyafuuka ly'abalonde mu kanaffe tulina okubeesiga. So Maria,
just have that peace. Happy to first thing in the morning. Yeah, I agree. nze mmanyi omukulu ajja kumenya abantu bwe yakolanga abantu bonna baba bali mu kkooti akuba ggulo limu era ate olunaku lwalwafuna tuba tukola strategize where we need and ready to whatever and it has to be high level and tomorrow tulina okafuwa kubanga ekiro that's how we does it oba ku makya kwolwo yayagala commitment
Let me go for my next meeting.
Well done.
Are you sure? Tujja lukendeza tuluzzenyo erinnya. Bino bibadde
Okwate ensawo yeeyo
ebbaluwa z'echairman amaze n'azinkolera zigenze
obudinga bugenzi
nkulagambye nti gwokuna akusindise oyogere n'abakulu bano
chair emmere
nagamba siriiwo
yitawo buyisi n'emmere
kati yange